My name's Tom Jones, P6 Bid Builders. I help business owners get clean numbers, stronger cash flow, and a simple plan so the business stops running you. Quick favor before we start, not stop, grab a pen and paper. I'm going to be covering a lot today. It's probably going to go pretty fast because there's a lot to cover today. So grab that pen and paper so you can make notes so that you can actually come up with a plan for yourself at the end of this session. I'm going to have some stuff in here that's going to be very helpful for you. I'll share a few tweaks that you can make right away. I'm not just going to talk. I'm actually going to give you some information so you can leave with a plan. Here's what you can expect by the end of this video today. You will know the difference between tax preparation and tax planning. You will have 5 questions, and I think there's even a bonus question to ask your advisor this week. And you'll know a simple routine that creates steady cash flow and fewer tax surprises for you. That sound like something you'd like? And I'll also show you how this ties into growing your business, or even it can help your personal wealth as well too. You can get 10 times growth, up to 10 times growth in 3 years without the chaos that you have right now. And here's what this helps you do. You stop getting surprised by taxes. You know you can safely pay yourself. You can keep more cash during the year. Doesn't everybody like more cash? Not only that, you can make your decisions with confidence, whether it be hiring, whether it be equipment, whether it be growth. On the business side, on the personal side, whether it be your investments are doing correctly, how do I go my retirement plan? Tax planning can help all of that. Now, again, we're still in that first month of the year, and with the new year becomes new beginnings. I've mentioned this before, but as you know, early this year, I became a grandparent for the first time. Watching my granddaughter grow, even over the last few weeks, shows how such a little thing can have such big changes in a short amount of time. In business and in your personal life, it's the same thing. The big changes usually come from small steps done consistently. So what's happening with her? She's getting fed, she's getting changed, whatever. She's growing. Same thing's going to happen in business and your personal life. Tiny changes in how you handle your taxes can make a huge difference by the end of the year. Let me start with something I hear all the time that I hear from friends, other business owners, whatever else. My accountant is fine. And they might be, but here's the big question. If they're not checking it in with you in real time, how does that leave you? Does it leave you guessing on cash, guessing on taxes, guessing on what you can pay yourself? Direct message me. Yes, if any of these are true. Revenue was good, but I still don't feel like it was. Why is that? Maybe because you're not collecting cash. Harder than ever, but the cash isn't there. Kind of back to that revenue number. Where did it go? What are you spending it on? Have you done that? My accountant filed everything, so I thought I was fine. That's just filing the reports. It's not helping you. Now, here's a simple question you can ask yourself. How often do you actually hear from your accountant during the year? Direct message me a number. Is it once a year, once a quarter, a couple times a year, monthly or more? Just let me know. 1 for once a year, 2 for a couple times a year, 3 quarterly, or 4 monthly or more. 1, 2, 3, or 4. Direct message me. Next thing, when you do have a question, how long does it take to get the answer? And be honest, does the delay frustrate you? If it does, why is that a problem for you? It's because you're trying to make decisions in real time, but the guidance that you're hoping for shows up after you need to make that decision. So that's what that happens. Now let's go even one level deeper. When the answers are delayed, what happens? Do you hesitate on hiring? Do you hesitate on buying equipment? Do you guess on what your owner pay should be? Do you avoid spending because you're not sure about taxes? And what does that do to you? More stress, less sleep, less family time, more second guessing, more pressure at home. Wife wants to go on vacation, but you can't afford it right now, or you don't think you can because you haven't gotten the advice of what needs to be done. If this is your situation, if nothing changes, what do you think happens by the end of the year? You get that surprise tax bill again, and then you feel like it's another year that you're behind. Who ends up paying for that? You, your family, or your business, or all of the above. Now let's flip that. If you could eliminate tax surprises and know how you could safely pay yourself, how would that change your stress level and your life with your family, your business, and everything else? What would you rather have? Steady cash flow, predictable taxes, clear owner pay, or have that confidence before you make those big decisions? Would it be worth fixing if you could do it in a simple planning rhythm? That's kind of what tax planning is. But today I want to clear up one thing. That's what this whole session is about. I want to hear about one thing. People may not want to hear this, but tax preparation is not tax planning. Tax preparation is rearview mirror. You're looking in the rearview mirror, what happened back here. Tax prep is necessary. It's compliance. It looks backwards. It answers, what do I owe based on what's already happened? Tax planning, you're going to look ahead. It's like when you're driving and you look ahead, you know what's happening. Tax planning looks forward and answers. What decisions should we make now legally to reduce taxes and protect my cash later? Say this with me. Tax prep reports the results. Tax plannings shape the results. Let's just do a little visual here, even a little bit more. I'll just show you a little visual here. Let's look at this. We just had done 2025, right? Here's the whole year. January, February, March, April, May, June, the whole thing, month by month. You've had all of this time to do tax planning? Well, now we're into tax season, or I should say tax preparation season, February, March, and April. So what's happening is you're trying to condense all your decisions in here that happened in this amount of time. But the other issue there is you're making these decisions based on what's already happened. You can't change it. So you're trying to do it in this short amount of time, whereas in 2026, look at how much time you still have to do that tax planning, to make the decisions. We're only in January. You still have all of these other months that you can make decisions that will not only affect you, it'll affect your business, your cash flow, your family life, all of that. Wouldn't you rather make that big decision now so that when you get to 2027 and you get to that tax preparation time, you already know what's going to happen? You have no surprises, no stress. I mean, I don't know about you, but I think I'd rather have it that way. So again, here's the analogy. Your tax prep is a rearview mirror. Tax planning is a windshield. One tells you what you've already hit, and the other helps you avoid the crash. If your advisor only talks after the year ends, you are not planning, you are reacting. Now I'm going to talk about why business owners get hit harder on this. It does happen to individuals as well, because there's tax planning for individuals as well. But with business owners, they get hit hard because costs change fast. Tariffs or anything else, you got to make decisions what's going on. You may make that one big move to buy that piece of equipment that can change your tax situation fast. And if your advisor doesn't know about it, what are they going to do? Not only that, maybe you have a big growth in your business. Growth can make you have pain, whether you realize it or not. It may look great. It can cause you some tax pain. How does this happen? Oh, I've seen in the past. I've seen owners grow revenue without their profit growing. They pay taxes on money that they never really kept. What can that be? That can be money that they never got paid for. They hire people without knowing their cash impact. They didn't do a projection. If I hire this person, what's going to happen? What do I need to do? They buy equipment without understanding the timing. They get that squirrel look. Squirrel, shiny piece object, grab that piece of equipment. Let's go. They take the distributions out of their company with no plan. Then they panic later because the company doesn't have the money and they had spent it personally as well. It usually comes down to big one mismatch. You think your accountant is watching it. They think you will ask for something when you need something. Again, let me repeat that. You think your accountant's watching it, so you're thinking one thing. The accountant thinks that, well, my client will call me and let me know when they have questions. You can see why there's that mismatch or miscommunication. If you do not ask for planning, most firms will default to filing just to make sure that you're in compliance with everything. Here's where you can make a big change. Here's something that most people don't realize they can do and what they should do. You should have a clear agreement with your advisor. You and your advisor will have different ideas about what is and what is not going to be done with your information. So that's why you should have that clear agreement between you and your advisor of what's going to be covered and what's not. Because you may assume they're watching cash flow. You may assume they're estimating taxes for you during the year. You may think that they'll warn you before you make big decisions or what to set aside. Your advisor may assume they're only filing a return. They're only entering data you provide. You will ask them if they want planning, and that you will tell them before you hire, buy, or make a big revenue change. So nobody's wrong. It's just that you both get surprised. If you have that clear agreement up front, nobody's surprised because you know what everybody's going to do, what they're going to do, what you're going to do. That's why an advisor relationship is an all-year relationship, not a once-a-year transaction. So that's another thing to think about. Tax prep is a once-a-year transaction. Tax planning is a whole year of advice so that no one's surprised. And again, in the agreement, it should be crystal clear on what is included and what is not, how fast you get answers, when planning meetings happen, and if you can ask for questions before you make big decisions. The question to ask your advisor right now is, what's included in the prep? What planning is extra? And how often are we meeting? Because as we all know, guessing gets expensive. All right, remember I asked you to get that pen and paper out? Well, here's where you can start writing down some stuff. Sorry about that. Forgot to shut my phone off. Get that pen and paper out because here's 5 questions you can do. You can ask yourself and get some answers this week. 5 questions to ask your advisor next week. When is our next tax planning meeting? Not tax prep, not filing, planning. If they cannot answer that, you do not have planning, you just have the tax preparation like we talked about. And there's that mismatch. You want to get that mismatch cleared up. What should I set aside each month for taxes starting now? Not a guess, a target based on year-to-date numbers and your setup. Question number 3, before I hire, buy equipment, or raise my pay, can we run the tax and cash impact first? Think about that. A 10-minute check before you make that 10-minute phone call before you make a big move can save you thousands of dollars. Question 4, what is one change we can make this quarter to legally lower my tax bill? Not theory, not just, hey, let's think about this. What's one real move you can make in the next 90 days that will have an impact on your tax return? Question 5, how will we track this during the year so there are no surprises? We don't want any surprises. Are we going to do it monthly, quarterly? What reports? Who owns what? that gets back to having that agreement in place so everybody knows. These questions will create confidence for you and can save you thousands of dollars. What changes when planning is done right? You stop guessing, you know your owner's pay, what taxes to set aside, what cash impacts you have, and when to grow your company. Not only that, like my example showed, your tax season becomes predictable. And again, it's not tax season, it's tax filing. Tax season is a whole year. You should be doing tax work all year long so that you know. Clarity beats cleverness every time. And not only that, it helps management measure decisions. Excuse me. Now, here's a big difference maker that you can do. Turn your planning into a routine. Think of it like a simple habit. For example, set aside every Friday, 5:30, like coffee, like a workout, like a routine. Do not negotiate with it, whether it be once a month, once a quarter. You go back and review it. You make plans on that. You talk to your advisor. No debating. No, I'll do it later. You just do it. Put it in your calendar. The last Friday of every month at 4 o'clock, I review the month. The following Monday, I give my advisor a call, talk to him, and say, hey, what's going on? What kind of planning can we do? What does this mean for you? Steady cash without surprises because you're doing that plan all the time. Less stress because you know at the end of the month, hey, I know where I'm going to be at. If you had a great month, you're going to have to adjust things. If you had an awful month, you're going to have to adjust things, but you're going to know how to adjust it instead of waiting until you can't change it. And you can measure weekly, monthly, or quarterly, or however you decide to do it so you can manage better. This is part of pillar one, having those clean numbers that you can trust. So it's not only getting this routine of tax planning, it's getting that routine of making sure your company books are in order. All right, here's my bonus question number 6. Question 6, that bonus question I told you about. Do you have an agreement in place of what is covered and what is not covered by the service fees you pay your current advisor? Getting back to that, because if you don't have that agreement, you've got that mismatch and you can have an idea of what is covered and your advisor has a different idea of what's covered. If you have that agreement in place, there's no surprises. This is what it covers. This is what it doesn't. Here's how often I'll communicate with you. If you want a one-page checklist with these messages, direct message me with the word plan, and I'll send you these list of questions. I'll send it to you. No worries, no fees. Also, if you wanted to talk about this a little bit more in detail, I do offer a 30-minute proactive cash flow and profit session. 30 minutes free, just my time and your time, no fee to you. We'll put the link in the comments section for you so you can access that later on. All of this fits into my pillar 5 of the P6 framework, owner wealth and tax planning. It connects everything together: clean books, profit systems, business value, leadership, communication, everything. And if you've heard me talking about growing your business 10 times in 3 years, this is part of it. Because you cannot scale if taxes keep punching you in the face in that short amount of time, like I showed you. If you plan throughout the whole year, they can't punch you in the face anymore. So you got to do that annual planning to get this done. But think of it, annual planning is not once a year. Annual planning is done throughout the whole year. So think of it as not only an annual plan, but it's an upgrade for your business because your business is going to get better. And then once a year, do a full real review, not just filing the return, but looking forward. The perfect time to do it is after the return's filed. We made all these plans. Did they come true? If not, what do we need to adjust this year so that does come to you? What does this mean for you? If you do this annual plan, you're spotting savings early. You're building wealth inside and outside the business. And then you're also staying in control as you grow. And you're growing the business without chaos, or running the business without chaos. And this is what planning is supposed to feel like. More control, more confidence, less stress. When I announced this live event, tax planning versus tax preparation, a lot of people actually started direct messaging me messages. So I actually thought I'd put a few of them in the session here and we could talk about them. Too late, except after the year's done. You can do a few things, but not very much. The earlier you start in the year, the more options you have. Because even starting now, you can reduce surprises and improve your cash flow. My accountant is good. Do I still need planning? Maybe your accountant is great. The real question is, do you have that planning rhythm with your accountant? Do you have that agreement with your accountant to say what is covered and what it isn't? Or do you only talk at filing time? That's what you need to figure out. How often should planning happen? Well, most business owners do better with monthly check-ins, quarterly at the most. Individuals, quarterly check-in, if they're really an intense individual, but mainly semi-annual check-in for individuals should be good. And then, of course, that annual review, where you review everything that you had talked about and see if it came true. The goal in all of this planning is fewer surprises, less stress. Next question that people ask, what do I need to have ready to do a tax planning? Got to make sure you have clean books for a business. For an individual, you have to make sure that you have all your income sources, your retirement sources, your investment sources, all of that. And you have to have that willingness to ask questions. If you don't ask the question, the advisor can't answer it. The advisor's not going to know what you're thinking. You can't just assume they do. If you hear a question that you want answered, ask your advisor. This is where planning saves you money because you may have an idea of what's going to happen. You heard a question. But when you talk to the advisor, it doesn't work out. Planning can save you a lot of money. And of course, the big question is, what if I'm worried how much is this going to cost? Would you rather have a big tax surprise that costs even more? Or would you like to do the planning so that you can control yourself, knowing what your numbers are and what decisions to make to improve your cash flow, to improve your tax situation? Even one planning move this quarter can be worth it if it helps avoid a surprise tax bill. Wouldn't you rather have less stress, pay a little bit more money, know exactly where you are, come in the next quarter, keep going with that? So again, I hope this helped you out. If the tax stress hits you every year, if tax stress hits you every year, it is not you. It is a lack of planning. You do a little bit of planning, that stress can go away. Again, remember, tax planning is the past. Tax planning protects that future going forward. And the biggest goal, take nothing else out of this today, get aligned with your advisor on what is covered and what is not. Expectations on what they're going to do for you, what you have to do for them, and your communication. What is the time frame that I'll get answers, or when do I need to get you things? As an example, tax returns are due April 15th. When do they need the last date that they need the information by so that they can file it on time and review your information, make sure everything's there? So if you stop reacting and start making decisions with confidence on a scale of 1 to 10, how important is real-time support to you? This is with your advisor. How important is real-time support? If you are 7 or higher, that means you need to tighten it up. You need to make sure you have that agreement in place, that you really want planning, and that you don't want tax surprises. Again, thanks for your time today. Sorry, my voice is a little hoarse. I've got a little chest cold, I think. But again, if any of this hits home, give me a plan and I will send you that checklist. If you want to talk about it directly with me, again, I'll have that link in the comments section, and book that free 30-minute cash flow and profit strategy session that we can do over Zoom. Again, the link will be in the comments section. And one last thing I'd like to ask you, do you know of any business or even an individual with these issues that you've heard about, they talked about it, who could use our services to help them out? Send them a link to this video or have them DM me plan and I'll get a hold of them. And to end this, remember, reacting is optional. Planning is your choice. If you don't do any planning, whatever happens, that's the reaction you're going to get. It's optional. So again, have a great week. DM me if you have any questions or set up that free 30-minute cash flow and profit strategy session. We can even call it a tax planning session. And again, I'll see you next week with another Facebook Live on Friday. Have a great week, everyone. Thank you.